Well, that's the kind of view we inspired got from a bunch of managements there. But when the Eurozone continues to feel jittery over the eco-crisis and US markets expecting another sort of quantitative easing, what could be the ideal investment strategy? Now, Corey Larry caught up with Bill Bonner, the director of Equitymaster and the publisher, The Daily Reckoning. Let's listen to what he had to say.
Today, I think you have periods in which economies are growing and you want to take advantage of it. Maybe that's the case in India. It's not the case in America. In America, we have an economy that's teetering, that's dangerous, it's going to have a hard time moving forward. And for an economy like that, you just want to be mostly out of it. And being out of it means being in cash. You'd be in dollars, which I don't like being in dollars, but you got to be in something. And I would be in gold. We had a huge run-up in the gold market. I don't think that's over. I think that run-up in the gold market is telling us that the monetary system itself is in danger. I believe it is in danger. I believe the people running the financial authorities, the central banks worldwide, don't really know what they're doing. I don't think they're really capable of dealing with a situation like this. I doubt it anybody could. And so I think what we're going to find is we're going to find more crises, more attempts to solve the crises by introducing even more liquidity, which further undermines the real health of the paper money system. So eventually it'll crack up, and eventually the price of gold will probably go up far more.
On a global portfolio allocation, how much money would you put in riskier assets, in which I would include emerging markets, into which I would include metals, some of the base metals?
I wouldn't put money in metals. I regard that as speculation at this point. And I wouldn't put money in, I wouldn't call it that. I wouldn't say risky emerging markets. They're risky at some level, but at some level they're not risky at all. I think that a wise investor should have a position in growth markets. And the growth markets of the world, we know what they are. And some of them are BRICS, some of them are not quite BRICS, but whatever they are, a wise investor should have a position in those. Should he buy the most expensive stocks in those things? Probably not. Should he buy at the most expensive time? Probably not. But he should be in because those are really sensible investments for the long run. So he has to choose when to get in and what to get in. And I know that we are finding good values in some of the less known companies in India and in Singapore and Indonesia, places like that. We're finding companies trading at good prices, and in China too. There's many companies trading at good, they're not as well known as the big companies, but they're trading at good prices.
What would those names be, if I could ask?
I'm not saying.
But it's my job to try.
No, but they are good values, and they represent to us a very long-term position. We're getting at prices, so we don't care if they go down 20%. If we went down 40%, we would be worried, but we would still realize that these are volatile markets. So what portion should you have? I think the majority of an investor's portfolio now should be invested in safety and those things. Safety things are cash and gold. And beyond that...
Cash being dollar.
Cash for a dollar-based investor. I think you have to, depending on what your home currency is, you have to go with that. But cash, gold, and then it's into more particular things like land. Land was a great thing to have, but it's not something you can generalize about. It depends on where it is, how much you pay for it, what kind of rent you get off it, and so on. And that's true, almost the same thing is true in the emerging markets.
What about crude oil?
Generalize.
What about crude oil?
Crude oil is like, to me, metals. I don't think I want to be a speculator.
Because if China slows down, that's going to be the first things to get hit.
I assume that investors in crude oil know what they're doing. They're pricing it now. They see more than I do. I'm not going to I'm not going to beat the whole world speculating on oil. I just don't know what's going up or down.
So, Bill, in net, if you could summarize in about 30 or 40 seconds, where do you see the world, the financial markets of the world headed now? If we take the US markets, Wall Street as one, the Asian markets as one, and the European markets as one. You see Wall Street and Europe stagnating at the levels that they are right now, and Asia putting in the main pressures coming in from Asia, or do you see Asian investments now going in the reverse direction and coming into the developed world?
I don't see a change around of Asian investments going to the developed world. I don't think that's going to happen. I think what's going to happen is that one of these crises, there are lots of them, you know, they're centered in China, the U.S., or Europe. One of those crises is going to go bad. It's as if the financial authorities had lots of balls they were juggling in the air, and they're not that good. They're going to drop one of those balls, and probably we're going to see a sell-off. We're going to see a sell-off in U.S. stocks, mainly in U.S. stocks and in risk assets like commodities. And a lot of that hot money is going to get burned up. And when we see that, we're going to see a rush into the dollar and to bonds. It'll mean, which I don't think is a healthy trend, but I think that's what we're going to see, a dollar rising and U.S. bond yields actually going down. So that would be what I'd expect. And I expect those in that sell-off to hurt the Indian stock market, because there's a lot of hot money in the Indian stock market and Chinese market. So I think there'll be a crisis, a sell-off in equities, a rush to safety. I think that rush to safety will probably not mean dumping gold. I think people now see that gold is also a safety, and they're going to go for gold and for the dollar and for bonds. And then I think we're going to see the real excitement, which will be the final end of the paper money currency system, in which the financial authorities, in order to combat this problem, this sinking, this leverage, the ECB and the Fed are both going to be buying very, very heavily.
So, Bill, what you're saying is ride the momentum in equities for now, sell them on rallies, and buy gold on dips.
Absolutely. Good advice. Thank you.